All right, Assalamu alaikum and welcome everyone. We're just going to give it a couple minutes before we get started today. Thank you so much for joining. All right, and with that, we'll go ahead and get started. Good evening and assalamu alaikum. Thank you all so much for joining the Muslim Legal Fund of America, also known as MLFA, for today's Nonprofit Department and Criminal Department webinar series. I am Aisha Yuki, MLFA's Training and Development Manager and Nonprofit Consultant. Today's event is called Protecting Your Charity, Voluntary Steps to Comply with Anti-Terrorism Laws, which is part 3 of 5 super important and information-packed sessions tailored specifically for Muslim nonprofits whose work involves both international aid and domestic advocacy efforts regarding sanctioned countries. MLFA is a community-centric, grassroots nonprofit organization fighting for national security reform and upholding and establishing justice in our courtrooms and communities for Muslims in America. We are uniquely positioned in that we have 4 legal departments in-house at MLFA: Federal Criminal Defense, Civil Litigation, Immigration, and our nonprofit governance departments. If you or anyone you know needs help in these areas, please go to our website and fill out an intake form online at mlfa.org. Before we begin, we will be hearing from Sana Salim, who is our nonprofit governance department program manager and staff attorney. So Sana, over to you.
Assalamu alaikum and good evening, everyone. Thank you so much for joining us. I know I always say this, but it's really important information that Sophia and Homa are going to be going over today, especially if you are involved yourself or you know anyone who's involved in organizations like Aisha said that are doing international advocacy work. I just wanted to quickly review the titles of our 2 previous webinars. If you have a chance, we'll post the link for you. The first one we went over in May was called Understanding OFAC Licenses, Navigating U.S. Sanctions Compliance. We intentionally kind of chose the order that we wanted to do these in. So if you haven't already seen that one, we definitely recommend checking that one out as well. And then the second one we did earlier in June was called What is Material Support of Terrorism and How is it Proven? Again, these are all really fundamental laws that organizations who are doing international advocacy work should kind of know about and keep up to date with. Like Aisha said, am the nonprofit department program manager. Sophia and I actually work really closely together on legal screenings for organizations, for nonprofit 501c3 organizations. So Homa and I do kind of preventative work. We review organizations' internal documents and provide a report and a board training for organizations. And then Sophia and her team basically do OFAC and vetting, kind of digging deeper into any potential material support issues that an organization may face if and when they're doing work in any of the sanctioned countries. And she'll go over a little bit more about that in her presentation later today. But it's a really great service that kind of provides, it's almost a parallel service. You're getting organizations work with both of our departments in this legal screening process. So something that I think is becoming more and more at the forefront of organizations. We're really excited and proud that so many organizations are coming to us with this request and are concerned for the health and compliance of their organization. And so I'll leave it at that. I could go on, but I want us to get started with this evening's program. Thank you.
Thanks, Sana, for that overview. I'm going to cover a couple of quick housekeeping items before we jump into the substance of today's program. So just so you all know, we will be reserving some time at the end of this webinar for questions, and we kindly ask that you do not share any personal or identifying information about yourself or your organization during this webinar. Additionally, please refrain from discussing specific facts or legal issues that your organization may be facing, but keep the questions broad and general, as this is not a privileged environment. If you do have individual questions or need legal guidance, we do encourage you to contact us directly. The second housekeeping item is I wanted to invite everyone that's attending this webinar to MLFA's upcoming legal summit being held on August 23rd at SMU Law School here in Dallas, Texas. And more information about the legal summit will be found on our website. Our speakers for today are Huma Khan, who is a nonprofit governance department senior staff attorney with MLFA, as well as a family-based immigration attorney for her private law firm in Chicago. And we also have Sufia Khalid, who is our senior staff attorney in our federal criminal defense department. Sufia has been with MLFA since 2019 and works on both trial and appellate federal court cases involving entrapment, material support to terrorism, and so much more. And with that, I'll hand it over to Huma to get us started.
All right, good evening, everyone. Thank you so much for joining us. I'm actually going to start with just giving you an overview of what we're going to cover today. If we could go a few slides ahead. Yeah, there we go. So we're going to be covering 3 topics today. It's governance, financial best practices, and anti-terrorist financing procedures. All of these things are actually very closely intertwined. An organization that practices good governance and good financial procedures will often be prepared for the type of compliance work it needs to do to comply with the anti-terrorist financing procedures that are set forth by the IRS and the Department of Treasury. All right, next slide. So kind of your first line of defense is really state and federal compliance, governance, internal controls, and transparent financial practices. So as a nonprofit, if you are making sure that these particular areas are robust, then it is really your first line of defense against any type of government audit that could take place based upon any type of the international work that you may be doing. So I want to actually start with purpose. A lot of organizations don't realize that your purpose is actually a very integral thing that the IRS looks at. In your initial filing, you gave the IRS an overview of what the purpose and the mission of your organization is. And the IRS expects you to adhere to that mission. So when a nonprofit collects funds, the IRS deems those funds to be held in the public trust. They don't belong to anybody in particular, but to the organization as a whole to help it further its mission particularly. So what they want to see is that they want to see that you are using the funds that you collect in furtherance of the mission and the purpose for which they gave you the tax exempt status to begin with. And so what you want to ensure is that your mission is pretty clearly stated. It's broad enough to allow you to engage in all the types of activities that you want to engage in as an organization, and also narrow enough that it's clear what your organization does and the types of activities your organization engages in. And then that purpose really needs to be stated clearly across all your organizing documents. It should be in your bylaws, in your articles of incorporation, if your state allows it. Some states have very truncated articles of incorporation, and so they don't really allow you to have a lot of substantive things in there. But if they do, then it appears in your articles of incorporation and all your federal and state compliance filings as well. So once you are sure that you are adhering to your purpose, kind of the next step in best practices is being aware of what your state is requiring of you as well. Now, not all states regulate nonprofits heavily, but there are several that do. Feel the closer you actually get to the capital, the more heavily regulated nonprofits are. And then California heavily regulates nonprofits as well. And then there's a lot of states that almost have no compliance requirements. But being aware of what your state's compliance requirements are is just incumbent upon every nonprofit. So we'll start with the easiest one, right? Are you filing your annual report with your state's governing body? So in a lot of states, this is the Secretary of State, but not in all of them. And so you want to make sure that those annual reports are filed so that to begin with your organization, it doesn't end up being dissolved for failure to comply with that. So that's kind of one of those really obvious things that you can check off. But then what a lot of nonprofits are aware of is that 40 out of 50 states actually require, to some degree and varying degrees, that before you can solicit funds from people living in those states and solicit donations from people living in those states, you actually have to register with them. So 40 out of 50 states require some type of what they call charitable solicitation registration prior to you soliciting funds. And so a lot of organizations don't realize that, they have people on their email lists and they're sending out, email blasts with donate now buttons, and they don't realize that, or they're doing donation campaigns and they're sending it out nationwide, and they don't realize that you can't necessarily solicit funds in that manner in a state that has requirements, compliance requirements. So you want to make sure you're aware of where you are soliciting funds from, and this is direct solicitation. And you want to make sure that that particular state, you want to be aware of the filing requirements that they have. For example, in the state of Illinois, where I am, they require organizations to file annual reports with the Attorney General's office if they're soliciting funds, and they want to know how much you solicited and how it was used. And then the larger an organization is, they actually require audited financial statements every year. So it's something to be aware of. So regulatory compliance also includes, obviously, federal compliance. So this is, the most basic of this is that you're filing your 990s. There is almost nothing that will automatically cause you to lose your status, except for failing to file your 990s 3 years in a row. So when you do that, you hit the third year, the IRS just automatically terminates your status. And then it's actually a huge hassle trying to get that reversed. So make sure that you are filing your 990s. Make sure that you are your 990s contain accurate information, and report fully and transparently everything that's on your books and records. Also, you want to be your 990 will ask you what your stated purpose is every single year. So if there's minor shifts and changes and you notice an expansion in your purpose, be sure to mention it. The IRS is usually okay with minor shifts that really are still in line with the main purpose of your organization, the main purpose for which they gave you that 501c3 tax exemption to begin with. But when there's a massive shift, sometimes they will make you almost reapply, or at least reconsider the nature of your status. Also, you want to make sure that you're not engaging in excessive lobbying. A lot of organizations don't realize that they can lobby. It's just in a very limited manner. And it's best to speak to an attorney, a local attorney, about what that comprises, and then making sure that you do not intervene in a political campaign during campaign season for or against a candidate that's running for office at all. That's one of those just blanket prohibitions, which I know it's been in the news lately, but it is one of those blanket prohibitions. So that was the just general state and federal compliance. And so now we're going to jump to governance. So Now, governance is how you run your organization and what the IRS wants to see. They actually provide a lot of detailed information for nonprofits online on what they expect a nonprofit and how they govern themselves. So kind of see your nonprofit as like a mini country, and your bylaws and your policies function as the rules and regulations and the laws for your mini little domain. So start with the board. The board is the governing body of a public charity or a 501c3. And the board is, the IRS expects your board, if you are a public charity, private foundations have different rules, but if you're a public charity, the IRS is going to expect you to have an independent board of directors. Now, what that means is that the majority of the board of directors is not related by blood or marriage. The majority of the board of directors do not receive compensation. And then there's no conflict of interest, which I will actually go over down the road. But there's no conflict of interest between the board of directors and the organization. So that's what they want to see. They also want to see that there's a minimum of 3. So the IRS, usually this is regulated. It varies from state to state. Most states have at least a minimum of 3. There's some states like Georgia that only require 1, but the IRS wants to see a minimum of 3. So you want to make sure that you have a minimum of 3 board of directors who will actively participate in the organization, who can be engaged to fulfill all the duties that they're expected to fulfill. So what are those duties? They're called fiduciary duties. And one of the primary responsibilities of a board is to make sure that the funds that they collect are used to fulfill the mission and are used responsibly. And they're basically stewards of those funds. And they have to exercise the due diligence in overseeing those funds. So that actually lends itself to the importance of financially transparent books and records that the board can then use to make the decisions that it has to make. Meeting minutes. I feel like a lot of organizations, when they think of meeting minutes, they groan. Nobody wants to be the one who has to take the meeting minutes, but meeting minutes are actually, they function as the legal record that your organization complied with state and federal laws when it was making its decisions. So whether it be meeting minutes that are kept by the officers or meeting minutes that are kept by your board of directors, there should be meeting minutes that indicate what decisions were made, the basis for the making of that decision, and then the outcome of any votes that took place. The IRS actually requires meeting minutes be kept and that they need to be made contemporaneously. So if your organization finds that it's facing an IRS audit, the IRS is going to request those meeting minutes. If those meeting minutes are put together after, at least, so the rule is 60 days. So if they're put together after the 60-day mark, they don't actually function to prove you made the decision the way you were supposed to, or the way that complies with state and federal laws. So meeting minutes should be made contemporaneously, which is the IRS is within 60 days. I always tell people, especially with the advent of AI, the AI can make your meeting minutes for you, and then you can edit them to put them in a format that is more suitable to meeting minutes. And so it's really incumbent that you create that legal record and that proof that you made the decisions that you were supposed to make in accordance with the rules and regulations that are set out by the IRS. So moving on to controls. Now, we talked about how your bylaws actually function as kind of like the skeletal outline of how power is distributed within your organization. And your bylaws tell you who has what authority and how they use that authority. So not only does it lay out for the board of directors, but it'll also lay out for the president, the secretary, the treasurer, and any other smaller governing bodies that might exist, what those authorities look like and how power flows through that particular organization. So for starters, the main source of control are your bylaws, and that, which is why it becomes critical that all organizations are aware of what their bylaws contain, how power is distributed in the bylaws, how voting takes place, how often they're required to meet. And then secondarily, you have your controls. Controls are basically the policies that an organization has in its arsenal, whereby it uses those to govern how things are done. So I've listed here just a few more common policy types. Some of these, the IRS actually asks you specifically on your 990 filings whether you have these policies in place. So a gift acceptance policies. So if you're getting in-kind donations or very large donations, a gift acceptance policy will kind of lay out for you the procedure for accepting donations, and also within it, it should contain kind of a know your donor systems should be set up for your organization, where you gather that identifying information of who is making donations to your organization and then how that's all kept. The whistleblower policy, this is one of those that the IRS thinks is very important, which it is. And the whistleblower policy is basically if an employee or a volunteer or somebody within the organization sees that there could be either mismanagement of some kind or maybe violations of laws taking place, it gives them the leeway to bring that to the attention of management, whether that be the high-ranking officers or whether that's the board of directors directly, without the fear of retaliation. So it creates an atmosphere within the organization for transparency and for just good governance overall. And then the conflict of interest policy, probably one of the most important ones. Basically, it's a conflict of interest occurs when you have a director or an officer or an employee or a volunteer who has some level of control over the organization. They are decision makers. They are kind of the upper echelon, and the organization is then entering into a transaction that might financially benefit that individual, or that an entity that individual controls, or maybe their family. And so you want to be aware of and have a conflict of interest policy in place, for which everybody is trained on, everybody's aware of how to implement that and how to use that. So the sanctions compliance policy, I'm actually only going to talk about this for like 30 seconds because Sophia is going to go into a lot of detail about what this is. Just generally understand that the United States has a very broad sanctions regime that covers countries, it covers regions, economic sectors, it covers individuals. And OFAC is the organization that controls and regulates transactions that are occurring in regions that are subject to U.S. sanctions. So if your organization is working in a region that happens to be, say, a war-torn region or a region in which there's a great deal of need, and you do need to make sure you have a sanctions compliance policy in place, and you're doing what Sophia is going to be going into more detail about to ensure that you're protected. So the last thing I'm going to actually talk about is financials. I think this is one that we see a lot of organizations, especially early on, they don't necessarily get right. And a lot of times the default is to go to a bookkeeping method that is profit and loss. And the reality is that that type of financial accounting system doesn't work for nonprofits. So a for-profit and non-for-profit accounting system look very different. Whereas, like I said, you have your for-profit system that's based on profit and loss. A nonprofit system is really based on fund accounting. So it's understanding the funds that are coming in. Are those funds restricted in terms of what they can be used for? How does that appear on your books and records? How do you show how funds are used and for what projects they're used for? So this is really, it's called fund accounting, and it helps, it's creating a system that tracks restricted and unrestricted funds. And that is actually the accounting system used by nonprofits. The IRS actually expects you to use GAAP accounting principles, which are generally accepted accounting principles. And they look different for nonprofits than they do for other types of entities or organizations. And so you can, if you have an accountant, then you can direct them to FASB, the Financial Standards Accounting Board, that has actually laid out what generally accepted accounting principles look like for nonprofits specifically. So it is the board's responsibility to undertake financial oversight of the organization, and not only to secure adequate funding, but also to make sure that that funding is used the way it's supposed to be. It's the board's responsibility to receive accurate financial statements on a regular basis so that they can provide the type of oversight that they're required to be providing. And then something the IRS really emphasizes is that, and it's actually a lot of states will, once you hit a certain threshold, require this as well, that if your annual gross income exceeds the $250,000 mark, then you need to have an independent certified accountant actually do an audit of your financial records every year to be submitted to the IRS, and then depending upon your state's threshold, to your states as well. Why is this? It all comes back to the fact that an organization's funds don't belong to any one particular person. They belong to the organization, and then the IRS is telling you, well, we're not going to tax you because you're providing some kind of social benefit to society, either locally or at large, and so we're not going to tax you. But then you can only use your funds in a very restricted manner in fulfillment of that purpose. And so the larger you get, the more closely they monitor you. And then having a transparent financial system in place already will allow you to very easily comply with a lot of those auditing requirements. So record retention. So this is actually really important. It's actually a policy, but I'm putting it under financials. A record retention and destruction policy is actually incredibly critical. It creates a paper, it's like your meeting minutes. It creates a paper trail that you followed the rules and regulations, both state and federal. So you're supposed to maintain records, whether they be, and then the IRS requires that certain types of records have to be maintained permanently, and other types of records, the IRS requires that they be maintained for 3 years or 7 years, depending on the type of record. And so it's important to have a retention and destruction policy that lays out for anyone who's in charge of that particular task in your organization. They know, oh, these types of communications have to be maintained for 3 years. Can't delete any of these emails. After the 3-year mark, you can clear them out. Or, for example, these types of governing documents, well, despite the fact that they've been amended, they still have to be retained permanently. So it's important to be aware of what you have to retain permanently and what you can retain for different periods of time. Next slide. So I believe this might be the last slide. So a lot of organizations, when you're collecting money, you're collecting it for a specific purpose, right? You might be doing a particular activity or a particular fundraising campaign for something specific. When that's the case, you have to honor the donor's intent. So if you are collecting funds for an activity, and the donor then gives to you based on that particular solicitation, you solicit it for that activity, those funds now become restricted. And you can't actually use those funds for any other purpose without going back to the donor and asking if that's okay. So it's actually really important to make sure that your books and records and your financial records actually show the donor's intent and that restricted funds are only used for their restricted purpose. And that's why nonprofits use fund accounting as opposed to profit and loss based accounting. And that is it. So I hope that gave you guys a good overview of just generally, I know it was a lot of information, but just generally what's expected of nonprofits and how it's really your first line of defense when it comes to what Sophia is going to be talking about.
All right. Thank you, Huma. I always learn something. I have to take notes when I'm doing presentation with Huma or Sana. That I'm going to be talking about this last part of the voluntary treasury guidelines on the part that focuses on anti-terrorist financing. But before we get into exactly what the guidelines are, because that's the advice on sort of what you can do to protect your nonprofit, I want to talk a little bit on the current context and sort of why this has become a focus right now. You can go to the next slide. There we go. So there are several new initiatives being put forward by the current administration. One was an executive order that came out announcing the DOJ's new focus on terrorist organization financing. They've created the October 7th task force, which lies within the National Security Division of the DOJ. And that task force that they've created has been created specifically to investigate US-based individuals and entities that provide funding to Hamas. Other things that are the way that was characterized in that announcement is that it was investigating and prosecuting those responsible for funding Hamas, using the criminal division's money laundering, individuals, intelligence analysts, forensic accountants, data scientists. So the way that they have staffed this October 7th task force focusing on terrorist financing is very much looking like it is going to be focused on organizations, on fundraisers, on those sending large amounts of money to Palestine. And the way that they've staffed that suggests that we need to really step up everything, our protection of our nonprofits, all the steps Huma was talking about. They work very closely with nonprofits in making sure that they are robust, legally robust. And this last part of the guidelines will help with this particular concern. Next slide. Another focus of the current administration is on these Iran-backed militias, as they are described. So Hamas, Hezbollah, the Houthis. There is an immense, very, very severe U.S. sanctions regime that covers Iran. And that also, there are also these designated U.S. foreign terrorist organizations. This implicates two large areas of criminal national security law: the sanctions regime that covers Iran and the material support of terrorism statutes. We did 2 prior webinars where we covered in depth those laws and how they function, how they work, how broad they can be applied. So if you're interested in learning or understanding more about how these laws can be applied to organizations, to nonprofits, to individuals, and where the law stands, I would recommend you go back and look at those 2 prior webinars. Next slide. This has also been very much in the news the last couple of weeks. We've seen dozens of congressional investigations in recent years, and more recently targeting a wide variety of nonprofits, and most recently specifically organizations working on Palestinian rights, immigration issues that are particularly relevant in our community and our allied communities. And those investigations are focusing on things like counterterrorism, terrorism financing, foreign influence, the types of issues that these policies, these guidelines we'll be talking about, can help protect against infringing up against. Next slide. The most frequently cited legal bases for these more recent congressional investigations into Muslim nonprofits, Palestinian nonprofits, Arab nonprofits, just in the last few months are the anti-discrimination laws, anti-terrorism laws, national security. So that is the sanctions regime, material support of terrorism, this idea of funding terrorism through charitable aid, humanitarian aid, Iranian associated sanction violations. So we've seen a significant increase in interest in investigating those transactions, those organizations for these potential violations. All right, next slide. So what are they looking for? The US government issues a national risk assessment report each year. And the one that they issued in 2024, they outlined the key threats and vulnerabilities that the government has outlined in the financial system. And so this, gives us an insight into how the government is looking at the risks and vulnerabilities in the system, and that can inform how we're looking at how they may view nonprofits or other organizations that are operating or sending funds to Palestine, Iran, Iraq, these all of these places around the world where there are these implications for material support, sanctions violations, anti-money laundering. So the threats, some of the major threats that they've outlined are foreign and domestic terrorist financing, fraud, weapons of mass destruction, proliferation, along with corruption, cyber criminals, and some others. The vulnerabilities, so this is where they think the largest area of risk is for these threats, and that is virtual assets, cash, entities not fully covered by these requirements, different legal entities, other banking issues, debanking, not fully verified banks, emerging financial technology. So cryptocurrency, for example, is something we've seen significant DOJ interest in. And a lot of cryptocurrency transactions were involved in a gigantic, very large criminal investigation. And those are some of the first charges that we've seen of terrorist financing related to Palestine and Hamas that the DOJ has brought. And so this gives us an idea of how broad the threats and vulnerabilities that they view are, and how they're looking out at a lot of these organizations. All right, next slide. Material support. So a big part of this, we have the 2339B material support statute mentioned here. That's just one of the material support statutes. Essentially, anyone who knowingly provides material support or resources to a foreign terrorist organization, or attempts or conspires to do so, or to an individual involved in terrorist activity. So it doesn't have to be an individual in a designated organization under the other statutes. That is criminal. Again, there are two prior webinars where we talk extensively about this law, how it has been applied to individuals and nonprofits in the past. And going forward, the expansion that has happened in that area of the law, and how it applies to things like speech and online activity, social media activity. So if you're interested in that, please go back and look at the prior webinars. Okay, so now that we've talked a little bit about what the current context is for these investigations, this interest in guarding against anti-terrorism financing, and this level of suspicion, and how the government is looking out at these threats and vulnerabilities. Now I want to talk about what nonprofits can do in addition to everything that Huma just talked about, because Huma's presentation, and I would encourage, if you're a nonprofit watching this, to please reach out to Huma and Sana, because they do really incredible work in making sure that all of those legal requirements, they do a full assessment, and all of those steps are necessary to make sure you are legally robust and protected. The last part in the Voluntary Treasury Guidelines relates to anti-terrorist financing. And that's the part where we cross over. And so then you might talk to us in the Federal Criminal Defense Department a little bit. But, before an investigation, we have a lot of organizations reaching out now and they're worried because of these increased investigations. Before an investigation, you can adopt a lot of these policies that Huma was talking about. An important one is this document retention policy that she was discussing, and that will relate specifically also to the anti-terrorist financing guidelines that the IRS gives us. These other compliance issues, getting ahead of that before there are problems. Basically, getting all of your ducks in a row, and engaging an attorney when you think that you might have issues. So that MLFA is here for that, and that's an important part of your compliance internal program. Next slide, please. So in this last part of the Voluntary Treasury Guidelines is where they discuss the different steps that your nonprofit can take. And this specifically applies to nonprofits that are doing work abroad. So if you're sending money to foreign charitable organizations or individuals involved with charitable work as part of your nonprofits, your US-based nonprofits work, there are several guidelines that the IRS has laid out now that are voluntary but highly advised to comply with as sort of your due diligence, the best you can do to really vet what the money you're raising, the programs you're financing, the work that you're doing to ensure that you are not at risk of violating any of these laws or actively violating them. One note on this is that compliance with these guidelines if you comply with all of these guidelines perfectly, that alone does not exempt you, if there is a violation from any kind of a criminal or civil prosecution, because there are a lot of competing interests. That material support slide, for example, that I put up earlier, that is sort of this competing concern that exists throughout all of the compliance guidelines that you're doing here. Because if you perfectly follow all of these guidelines, you vet all your partners, you get all of certifications, and you follow all of that perfectly, but there is stuff happening in your personal social media, or if there are personal connections that you have or personal knowledge that you have outside of all of the paperwork part and these steps, or someone a key individual or board member in your organization does, that can negate all of it. And so this is the sort of maximum due diligence that you can do. This is the recommended if you want to be in, give yourself the best chance of being in compliance with the laws. So that's what we're going to go through now. Next slide. This vetting process breaks down into a few steps. So there's 4 steps, and the first one is collecting all of the relevant information you need from an individual. So I'm going to go through all of these steps through an example. And the example we'll use is a US-based charity that is giving, a large amount of money to individuals on the ground that are in a sort of loose organization in Palestine. Let's say Gaza specifically. So what vetting should they be doing? So this first step is collecting all the relevant information. That involves getting the organization on the ground's name, getting their key individuals' names, any acronyms for their names, getting dates of birth, the jurisdiction that they have a physical presence in, so what country they're located in, their ID, a copy of their physical ID that has their local ID number and country of residence, the principal purpose of the organization. If they have a mission statement, names and addresses, also not just for the key individuals in the main organization, but if they have subcontracted organizations. So for example, if this charity on the ground is receiving money, but then they're working very closely with individuals that own an adjacent building, or people that are running, a food line somewhere. Those key partners that are dealing with a lot of the funds or receiving a lot of the funds, you also need to vet those individuals. So getting their names, their addresses, and then any sort of public information about these individuals and these organizations. The public information would be doing searches for if it's an organization, any annual filings or reports, but also Google searches for things like, has that organization been accused of having any kind of terrorist association on the ground, or associations with any organizations the United States has designated. So you want to collect all of this information. Once you've collected all, and oftentimes there's a form where an organization may have one or two different forms that they're using to send out to collect all of this, to make sure you're getting everything you need each time. Then you want to run each of these individuals and each of these entities, organizations that are involved, through the necessary lists. So there's a US OFAC sanctions search list that includes especially designated terrorists, especially designated individuals and organizations. There's also the United Nations list that also has sort of internationally designated individuals and organizations, and there's an EU list as well. A lot of overlap in these lists, but you want to run each of those individuals and entities through all of them. The last part is collecting prospective partners and the other key individuals doing this public search that we talked about. Social media, Google searches with different, different search phrases, and you can talk more with an attorney on how to do that. But that part is important, because if somebody fills out your form, they fill out all the relevant certifications that the IRS suggests, but it's very apparent from their social media, for example, that they are supporting or involved with a designated organization on the ground, or in terrorist activities on the ground, as described by US law, then that negates a lot of this. So next slide. This is an example of that form, right? And so this is you can have a standard form that collects all of this information. Next slide. And this is so there's those three different places where you have to run all of these individuals through, right? The OFAC list, the EU list, and the UN list. This is what the OFAC US-based list search looks like. Now, you can put the name in. An important thing when you're running these searches, you want to save these searches. You want to run the names before you are actually providing funds to these individuals. And when you do the searches, you want to save it with the date that you ran it. And also, if you'll see in the middle, there's a minimum name score. When you search it with 100%, it's only going to give you a few hits. It'll only basically give you if it's an exact spelling of the name. But next slide. When you adjust that, the less, the lower the minimum name score is, the more broad it's going to run. So that will account for different spelling names and ensure that you're getting any possible hits there are. If there are hits for the individual that you're searching, then each of those names you can click on, and it'll tell you sort of where that individual is located, their date of birth, and you can compare that with your individual and document that. So for example, let's say you're checking all of these to see if this is your individual. Your individual is 35-year-old in Palestine, and perhaps each of these individuals that appear here are in their 50s or 60s located in Iraq. That's you doing your due diligence to show there was a hit, but it wasn't my person, and this is how I knew. All right, next slide. Another thing, in addition to or part of the vetting, is getting these certifications that the individuals and entities also have themselves not been working with or employing individuals that are either sanctioned themselves or have been helping or assisting working with others that have been sanctioned. So that is a pretty standard certification that you can include now, because you want to have some requirements on your partners on the ground as well, and these foreign organizations and individuals. The last part is, or the second to last part, is reviewing their financial operations and ensuring that in part of your documentation policy, which they will also adhere to, is that they are doing their own checks for their own staff, ensuring their own staff are not on lists, that their own staffs are not involved in US designated organizations, and having something in place in your own policies that puts a burden on them to also comply with all of these US laws, and having a regular check-in system between you and that organization. Last slide. And the last part is also, and a lot of people forget this part because the concern is always looking outward, right? Looking at the partners on the ground, the individuals in the foreign organization, but actually in a large number of the cases where organizations or individuals in large organizations are targeted, the risk, the high risk, and the alleged criminal activity has come from the US-based individuals that were on the board and the organization itself. So the last part of the guidelines that they recommend is basic vetting of the nonprofit's own employees that should also be conducted. So searching publicly available information about your employees and board members relating to any terrorism or terrorist financing allegations or concerns, ensuring none of them are on the OFAC list or that none of them have violated any of the OFAC sanctions. That's just what the guidelines require, but we also recommend, doing, so we will also do a short training on material support and those laws, how broad that law can operate, so that with the board members, so board members can then think about their own social media activity, their own private group chat activity, their own political activity, and decide what is their risk level for their organization, and can sort of discuss when to discuss with an attorney, that individual risk for, and how that fits into the vetting of their organization. So there's a lot that you can do to combat all of these concerns that are being raised now, this extreme amount of suspicion that is being launched at Muslim nonprofits, Palestinian organizations, political organizations. There's a lot that we can do. Everything that Homa and Sana do, this last part of these Treasury guidelines, and you can work with us or with other attorneys to do this work. So I'm going to leave some time now for questions and give it back to you, Aisha and Homa.
Thanks so much, Sufia, for that. So really appreciate both of you guys for sharing all of this information. We're going to use the last few minutes that we have here to answer a few questions that we are getting from our audience. So we'll start with the first question related to some advice for nonprofits that might be facing issues, maybe some legal pitfalls, especially for international charities as they get started. One example is that nonprofits face problems working with major banks when they don't allow organizations to bank with them. So if you have any advice for nonprofits that are getting started in that space.
Sophia, go ahead.
I'll just start quickly and then I'll let you talk, Homa, because I know you've spoken to people as well that work pretty closely on this issue. But there's not really a lot you can specifically do to force banks. There's no enforceable personal right to have banks work with you or allow you to work with them in their work. There is a lot, though, you can do in terms of showing them that you are not high risk. So a lot of this vetting, for example, with GoFundMes, we've had success in getting GoFundMe accounts that were frozen to reopen and send the money by showing this diligent vetting of the individuals and all of that information and OFAC list searches that I was just talking about, and that has unfrozen GoFundMe accounts. So showing your own due diligence can go a long way. But Homa, what would you add?
I would just add that banks also face fines for transferring funds that could potentially violate U.S. sanctions. And so they're really risk averse. But most banks actually have policies that specifically address that, and they'll tell you what they're looking for. And what kind of transactions and what they expect of you. So I would actually suggest talking to your bank about what they want from you in order to ensure you can continue working with them.
Thank you. The next question focuses on international aspects of nonprofits that work abroad specifically. A lot of these organizations are collaborating with other organizations and forming partnerships. So how often should a nonprofit re-vet overseas partnerships? What's the best practice there?
I would say anytime there are changes, you definitely want to re-vet, especially where they're in conflict zones. For example, in Gaza, some of the smaller charities we work with, their partners on the ground change pretty often because just of the circumstances of operating in a genocide. And so that requires sometimes just vetting the individual that has changed out. Sometimes it requires re-vetting the entire process, right? So we had mentioned that sanctions regime, sometimes the fundamental project has changed. And it may seem small to the organization, but it could be huge. There's a big difference between, for example, providing clean water or tablets or something to clean water versus building a well. Building a well, you get into infrastructure, and that does implicate the sanctions regime and what you can and can't do, and it's not covered by a general license. So anytime there's a change in the project and the individuals, you do want to re-vet.
All right, well, any final comments that you guys might have? And if not, I can go ahead and start wrapping up. All right, well, I'll go ahead and share our next webinar in this series. It's going to be our final practical case analysis. It will be held on Wednesday, July 30th at 6 p.m. Central Time. The practical case analysis will be focused on applying sanctions and criminal compliance to a hypothetical client. So basically, you'll get to take everything that you've learned in this series and put it together and put your knowledge into action. It's going to be a hands-on practicum designed to simulate a real-world legal scenario. So there will be a hypothetical client and a case, and we'll be walking through the full analysis step by step. So super exciting event. It is in the chat here. We highly encourage everyone that's been following this series to please register for it. And secondly, there will be an exciting legal summit coming up in Dallas at SMU Law School, where there will be a nonprofit governance clinic where we will be having live legal screenings with attorneys that are going to be volunteering to meet with you and review some paperwork to get you, to get you compliant, essentially. So this will be a hybrid governance clinic. If you're not in Dallas and you want to participate virtually, you can also register on our website. And Senna, did you have any final thoughts?
There's just one more question if you want to take a look at the comments.
Absolutely. Okay, so one more question is, okay, if a company hosts a campaign on a launch good, is it necessary to register in all 40 of the states that you stated require registration? This is a great question. We do get this a lot. So what are y'all's thoughts on that?
So generally speaking, solicitation is pretty clearly defined as direct communication for the most part. It's when you say specifically reach out to individuals in the state by mail or by email or some other form of kind of direct communication, but posting on social media where it's not really being directed at any particular individual or just having it up on your website, it doesn't count as solicitation, so you're okay. But the minute you start sending out mailers and direct emails soliciting funds, that's when you really trigger that solicitation requirement. And then you need to look at the states where you're sending it.
And I think that was our final question. So with that, we'll go ahead and conclude, and we hope to see everyone in a few weeks. So thanks so much for joining. Assalamu alaikum.
End stream.